The dragon is on the back foot, and the chinks in its armor are finally tumbling out. Beijing today conceded that there are bubbles waiting to burst in the economy. The government has cut the GDP growth for 2014 to 7.3%, raising the red flag yet again about the health of the world's second-largest economy. The latest data punches the optimism of Chinese policymakers, who reassured investors over the weekend that the worst was behind them and that the recent market and currency volatility were in control. Not surprisingly, the Shanghai Composite slipped by 2.5% at the end of day's trade. The revision comes at a time when the Indian market is on a steady fall, taking cues from the meltdown in the Chinese economy. The big question on everyone's lips is, how long will the meltdown last? Remember, the Chinese crisis has already knocked off most of the gains made by investors ever since the Narendra Modi government took charge. And experts believe there is some more downside left.
The global sentiment has obviously taken a turn for the worse over the last month or so. We've seen the story with China, which seems to be the single largest sword that's hanging over the markets. Then we step aside and sort of look at what's happening in India as, utilization rates are low, earnings growth isn't there, the capex cycle hasn't picked up. We've seen a couple of important bills, such as the land acquisition being deferred, lack of clarity over the GST. So it does seem like a very difficult environment.
And there are reasons to be worried. Going forward, a deluge of data is expected from China in the next few days, and investors world over will take cues from these numbers before making the next moves. And India, which has been claiming that it is the lone bright spot in the emerging markets pack, will be on the edge until then. Ashwin Mohan, ET Now, Mumbai.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.